Now, banking consultant and former managing director of the Bank of Africa, Menson Tokono, is blaming the government for the poor approach adopted in cleaning up the financial sector. According to him, the best method was to consolidate some of the distressed banks and appoint administrators to run the banks rather than putting all into one institution. Mr. Tokono tells Joy Business it's unfair for existing banks to bear the cost created as a result of collapsing banks, adding that consumers will bear the brunt of the cost. He joins us via Zoom together with the Chief Executive of the Ghana Association of Bankers for more on his point of view. Mr. Menson, we're so grateful that you joined us. First of all, is it fair to impose 5% tax on profit before tax on the banks, as stipulated in the 2021 budget? Well, as we try and get Benson on the line, we now reconnect to John Ewa of the Bankers Association, and we're grateful that you joined us. Will you accept the 5% tax on profit before tax on your members? I'm afraid we're having some issues there, but as you do know, the main topic for discussion on this particular issue, this connection to them, is regards the 5% profit before tax, which is going to be imposed on several banks as stipulated in the 2021 budget. Already we're having various concerns from the banking industry. We're having several forms of reactions to this, and both gentlemen are going to be helping us with their point of view. They both seem not concerned, much more concerned about this development. I think we have Menson once again on the line, and if you could hear me once again, the question to you was that, is it definitely fair for governments to have imposed a 5% tax on profit before tax on the banks?
As an industry, we believe that if, as a country, we have this huge fiscal deficit, we must have a plan to address the deficit. We believe we have differences in opinion as to how to approach the cleanup of the fiscal gap. Is the approach that the policymakers are currently pursuing, which we believe can potentially be explosive and counterproductive. Yes, we believe the fiscal gap must be addressed, but we do not subscribe to an industry such as the banking sector, which basically at this time is needed the most to help with the national recovery process, should be the target of additional layers of taxes.
You described the initiative, the intervention, as explosive and counterproductive. Explain to us the reason behind this description.
During crisis period and uncertain times, the most, I say, popular stand as financial institutions to take is for banks to have closed their lending taps. But what did banks do during the pandemic? We basically closed our ranks and said, this is the time for us to stay true to our customers. This is the time to assist with the national economic recovery, such that the health pandemic did not metamorphose into significant economic pandemic as well. And that is why during the crisis, we came down in response to the regulatory measures announced by the Bank of Ghana, came down on a lending rate from between 150 basis points to 350 basis points. During the crisis, we also made sure that the wheels of the country was grinding by availing credit in excess of 14.9 billion Ghana cedis in new credit during the pendency of the pandemic. We know that the banking sector should be at the forefront of any economic recovery process post-COVID. And therefore, we need all the help we can get, all the capital we can muster to be able to provide the ammunition to the productive sectors to get us out of the quagmire we find ourselves in as a country because of course, the negative impact of the pandemic. So we do not think this is the time to layer the banking system with taxes, and particularly for the rationale that was given or has been given for the reason behind the new taxes that banks are supposed to be to be bearing. We do not think the rationale is justified. That yes, we believe that the banking sector debt cleanup should be taken care of, but we believe and a strong conviction that assignment, the beneficiaries have been a country Ghana, the economy Ghana, industries and sectors within Ghana, people and persons in the country. And therefore, if we are seeking to address that gap, it should be levied across board so that we all pay a little piece of it, and together we can then help to address it. But to target the industry, the remaining banks for the sins of the banks that went under, it's more or less punishing banks that from the regulators' perspective have done the best to stay afloat even in the midst of challenges.
Well, John, we're so grateful that you joined us. But of course, let's not rake in Menson here. Of course, you did hear from Mr. Iwua the need for this whole introduction to be reviewed. He terms it destructive and explosive and counterproductive. In your own term, do you think the 5% tax on profit before tax on the banks is fair enough?
No, in my opinion, it's not justified. I don't see the reason why the government should impose the 5% on banks. Now, remember that even if the banks are going to be responsible, you and I, as private citizens, we are going to bear the brunt. So I don't think it is justified at all.
Well, so paint the picture for us, the trickle-down effect. Of course, if this gets approved in Parliament, we're going to be seeing the payments come on. Paint the trickle-down effects on the prospects of service charges. Are we going to be seeing banks having to transfer the costs to that of the consumers?
Yeah, when you walk back a little bit, you will realize that the reason why this tax is being imposed on the banks and otherwise on the citizens is because of the closure of all the defaulting, as it were, financial institutions.
Yes.
For me, I think it was a big mistake by government.
Great. So now, we get that argument. We get that argument, but we want to find out from you the trickle-down effect this could have on service charges and other forms of the value chain of banking in Ghana.
Oh, honestly, the banks are going to increase some of the charges that they impose on customers. Withdrawals, when you issue a check and you withdraw cash from the bank, you know that the banks, they will charge you. Commission on turnover, that is the charges that the banks levy on customers at the end of every month is going to increase.
All right.
Even when you request for checkbook, there's going to be an increase in it. They're going to spread it on all the charges that they charge customers. So it's going to affect you and I.
Menson, we're so grateful that you joined us with your thoughts there, together with Mr. Iwua. We're grateful that you gave us your understanding of the remits in terms of impact the 5% profit before tax could have on the banking industry. The 2021 budget has placed limits on the amount of money government can borrow. The move is part of efforts